More juice for more IV. You ready for this?
I'm ready for this.
More juice for more IV. When you sell premium, you expect to retain some percent of the credit sold as profit over time. Here's my first question to you. Does the IVR environment, which we focus on heavily, does the IVR environment change the amount of juice, that's like premium, that you would expect to keep as a profit?
Pending our IV rank, not on opening IV rank. Now, it's going to be elevated.
What?
I'm saying, to answer here, you're asking.
No, it is IV rank on opening.
On opening,
yes,
is extremely important because volatility is going to be elevated.
Agreed.
Now, can you expect to keep that as more as a profit? The stock's going to have to cooperate, but your entry is going to be the only thing that you can control. And the answer to that question is yes.
So we have talked in the past. We have ballparked this. We did a bunch of research about 5, 7, 8 years ago, trying to figure out how much in a relatively high IVR environment, how much percentage you would keep on average. But now we have a lot better data and we have a lot more research on this topic, so we can actually narrow in. We've done 2 studies. We haven't presented either of them yet. We just finished them this week. We've done 2 studies on this topic. We're going to show you an index study today, and then over the next couple of days, I think we're going to show you one using different stocks to really narrow in on how much is a reasonable expectation of what you're going to keep based on the kind of positions that you have on. First of all, does the IVR environment matter? Yes, it does. And does the amount of money that you make as or can expect to keep as a profit depend on the IVR environment? And the answer is yes, it does.
Because you expect implied volatility to go lower.
Sure, but also because it matters. When you sell it when it's too cheap, you don't make very much money. So we did a study with 19 years worth of research, almost 19 years. We sold 45-day strangles in the SPYs. We managed at 21 days. We recorded the average P&L as a percent of the average credit of 10, 16, 20, and 30 delta strangles. We're primarily going to focus on the 16 and 20 because that's where we that's where we live most of the time. And we tested varying IVR environments, less than 20. What are SPYs right now?
What are SPYs? IV rank?
Yeah, IV rank.
18 and change.
18. So the SPY right now would be less than 20. Between 20 and 50, and then greater than 50. We have a general rule of like 30 and higher. We'll see where the team was on this. Outliers, including outliers like 2020, the average juice on a short strangle credit is between 10 and 20%. That's when they say juice, they mean the amount that you're going to keep. This is an average of all IV environments, of all environments. So how does that juice, I like how they use the term juice here, vary for the same trades in varying IV environments? And that's going to be where we're going to test next. So managed at 21 days, the average P&L is a percent of the credit received in all environments. 16 delta, 16%, 20 delta, 14%, 30 delta, 9%. Those are not numbers that you want to go write home about. You know, that's a lot of work to make money on those numbers.
Sure.
So how do we then turn this from what's essentially
any amount of risk you're taking too, buying power, use everything?
Yeah. Essentially, that's your zero sum game basically that pays just over risk-free rates. All environments. So we did a little homework here, and we said, okay, let's figure out if what we've been doing and talking about and saying if we're right, if our numbers are on. You've got more juice when you sold strangles when the IVR was above 20, and then when the IVR was below 20, of course. So in low IV environments, short strangles are most prone to outlier losses that bring down your P&L significantly. Trading in higher IV environments, you're less likely to experience outlier losses and therefore profit on a higher percentage of the credit sold. So we find here is that when we did it when we looked at managing in 21 days, selling SPY strangles, but now doing it in an IV environment where it's between 20 and 50, which is where we are most of the time. I mean, over 50, but most of the time when we sell it in high, it's like 30, 35, 40, 45, 50 in that range. 16 delta strangles, 30% expectation to keep, which is higher than we thought. 20 delta strangles is 22. If you average those two together, which is where we probably live, it's right around 26%. which is kind of exactly where we mostly live, 17% of the 30 deltas. What's really interesting on this slide, though, are the first lines and the third line. The first line shows that when you sell premium, when the IVR is less than 20, no matter what you think,
Really putting yourself in a hole on entry.
no matter what you think, it's not a good trade. Just take a look at 16%. If you make 7% when the IVR is under 20, you're talking about a strangle that a 16 delta strangle is usually trading in the neighborhood of where we currently are right now is about $4 or $4.50. 7% of that is a very low number. Let's call it 35, 40 cents maximum.
Yeah,
If you spread that out over 12 occurrences over the course of the year, you're not even talking about a 6% return.
right.
So that's not pretty. But if you go to where IVR is between 20 and 50, and you just sell the 16 delta strangle, and your return is 30%, okay, that's what you keep on that. Let's just say your average is 26%. That's even if you do between the 16 and 20.
Sure.
Then in that case, on a $4.50 strangle, whatever, at that point, you remember when IVR is higher, the IV is usually higher, so the price is usually higher. But you're probably collecting somewhere close to $1.50. And if you multiply that out by 12 times, you're talking about right around the neighborhood of $17 or $18 on $9 of borrow. So that return on itself becomes very attractive.
Sure.
Okay. So the difference goes from a 5 or 6% return to almost literally to quadruple that.
Right.
Okay.
Right.
So that's
Big numbers now.
That gives you your 3 to 4 times risk-free rate. That's where we want to be. It's funny how the math just plays out absolutely perfect, but it's fascinating. So not only is the percent profit higher when the IVR is higher, but the actual credit received is high as well. So on average, for every 4 points the VIX rises, the credit for a 16 delta SPY strangle rises by 1% of the price of SPY. So if the SPY is, $500, which it is now, when this VIX goes, that's exactly right. It goes from like 450 to almost 950 in that strangle. That's exactly right. It's huge. Mm-hmm. Yeah, but that's 4 points in the VIX. I was thinking, okay, that seems too high, but no, that's exactly right.
It's 4 points in the VIX, which is a big move in the VIX.
Yeah, it's a huge move.
Right.
Yeah, but the strangle goes from 450 to like 850 or 950, and then your numbers are massive.
Sure, same probability of success too.
Same probability of success, make a lot more money. Really, really fascinating stuff. In addition to receiving a higher credit and a higher P&L as a percent of the credit, the capital required drops significantly because remember, the model doesn't change. The regulatory model doesn't change, so the credit's bigger, so you put up less money, which is crazy the way it works, but that's the way it works. This means your overall return increases because your higher P&L and lower capital required for the trading. So looking at some of the takeaways here, selling strangles has always been profitable or has been profitable on average in all IV environments. However, lower periods tend to be much less profitable as a percent of the credit because the short premium trades tend to see most of their outlier losses here. This is why what we do at Tasty is so different than what anybody else does anywhere in the world when it comes to trading, because nobody else focuses on this and they think that every environment is the exact same. So premium sellers collect 3 to 4 times more juice if they sold the SPY when the IVR was higher than 20. Actually, we like to do higher than 30. There you go.